The three levels that I'm watching for Bitcoin are this space here in this wedge, and then I'm watching the top level, the 22.5, and then the bottom level, the 19,600. 19,600 is a key level for Bitcoin, because this is the support and resistance line of this massive channel, and once it broke that level, it did a very nice lift of for Bitcoin 6%, almost 7%, which sounds very little compared to Ethereum's almost 14% lift. So these are the three areas that I will be watching. So here's a great level. If it holds this level, if we see rehabilitation on the stochastics, and if we have clear signals, I cannot stress this enough. What I'm gonna tell you about trading breakouts, I'll be very clear about the signals, because we need the signals. Breakouts are very volatile, very high volume stages in the market, so we need to have clear signals. If you don't have your 3 S's before entering a trade, it's not, again, I know you're putting stop losses, but it's not worth it, because the volatility can knock you out. So and it's not like yes, you can lose only 5 or 6% because you're refining your entry points, but again, you're constantly if you constantly lose, you'll lose the motivation, you lose the focus. So it's not good to invest time and energy into defeat, so to say. So here you can see on the 15-minute the kind of volume candles that Bitcoin's having compared to, so over this period, so since Sunday when the breakout technically started, compared to the previous time, and you can clearly see that something is moving in the market. There's more volume into the price action. Now, the big level that Bitcoin has to hold is this level in the middle. So I told you about the space of the wedge. Now, this level in the middle is crucial for both directions. So there's a nice trade to be made to the upside, and again, it's worth it with a nice clear stop loss and great entry signals. It's an 11% trade upwards, and then there's a great not so great, well, half, because I would be taking profit at the 19,600. So it's a 3.6% trade to be made to the downside, and I would be taking profit at this area, because this could be again the 1, 2, 3, 4 with a deep 4 and then a 5. So this could be a possible count of this impulse wave to the upside. So great range to the upside, less to be made to the downside, but still worth a trade if, again, we have the right signals. Now again, you could be catching this trade to the downside. Let me take this away. You could be catching this trade to the downside from, let's say, somewhere around here. If you see your stochastics and your RSI and your vector candles signal short at the top, it's worth following it down, because from that area you could be making about 6.5% compared to just this support and resistance line. But if you catch, for instance, if you're afraid, this one here, the stochastic here, was a great signal. I don't know if we had any. Let me just double check on the vector candles if there were any vectors signaling this breakdown. No. This should be, oh, there it is, perfect. Do we have any reversal vectors here? No, we don't. No, we don't have on the 15-minute. We have this sell-off candle here. It stops on the 200 EMA. So no, we don't. We don't. That's another thing. In terms of when volume kicks in, the vectors become less reliable. So it's worth checking to see if you have your support broken, or if you have an MA broken and back tested. So for instance here, this would be a great entry for a short, but we do have the stochastics already down. So to me, again, I wouldn't be taking a short right now. I don't have enough yeses, I don't have enough signals to go in, and I would let it play out and see what it does. And honestly, I believe that now with Bitcoin being above the 20 EMA, so unless we break the 20 EMA, which is at 19,600, and that's why this level in the middle is so important. This level here, I would be looking for longs, because the trend is to the upside. It is making long moves to the upside compared to the faster, shorter moves to the downside. So here, what we've had so far in terms of shorts, it was only today's action, which was at 3.5, but with all this sideways, there was a lot of struggle to break through this, and once it broke it, it would have been, if you had this level in, happy days, you might have gotten in here at this double top formation, followed it down to here, and yes, it would have been a nice 2.4 trade. But it's still worth it. The point I'm trying to make is you could still be range trading now, even though it is a breakout time. What you need to do is be very careful about your stop losses, and be very careful about your signals to enter and to exit a trade. If you don't have clear signals, if you're not sure, better not enter it. If you're not, for instance, I entered a long in XRP. Once it back tested the support line, it gave me a little bit of profit at some point, and then came back and turned on me and stopped me out. But that's okay, because there was a small stop loss that I put right above the previous low, so it didn't cost a lot of money to be in that trade, but it was worth it considering the level that it could have got to. So long story short, for Bitcoin, before we go into the breakout technique, the breakout skills, watch out for this ascending wedge, watch out for the 19,600, that's the big 20 EMA that it needs to hold, and watch out for any possible topping out at the 22,600. If it does get there, there might be some nice short positions to take at that level. Could we see a fall from here? Yes, absolutely. I believe that the 4-hour RSI and stochastic RSI are in the overbought, are coming down from the overbought. They're moving quite fast for how far the price action has gone. Can they turn up? Yes, they can. Again, it's hard to read where this is going right now, and that's one of the points that I want to make about breakouts. When you actually admit that it is a breakout, when you actually see that it is a breakout, it's too late, because it's already done most of the move. So by the time this shows itself, it will have done a big part of the move. However, it is worth waiting for if you are not sure. So yes, you can commit your capital with a tight stop loss, but you have to watch it constantly, because there is a lot of volume, there is a lot of volatility, and most importantly for Bitcoin, there are a lot of levels of support and resistance that it needs to get through to confirm the breakout target. because that's generally when you know it's been a breakout, when it meets its target. So we do have one level confirmed, the level of the W here, and I will be putting the W again, the boom, back on the screen. There it is. Now the price action dropped below it. We have to wait to see if today confirms above it. I'll give you the news in the morning, of course. I'll post the latest TA, but at the moment it is right on the line. It's keeping us on the verge. It broke out of this descending wedge, but it hasn't broken the overflow area, this yellow line here, and then it hasn't broken the 22.6, 22.9 level that it needs to break en route to 25k and then 31k. So these would be the two breakout targets. Now, considering the fundamentals and all the macro elements that are going on in the economic landscape, again, a break to the downside could happen. This bottom line at the 19k has been very heavily tested for the past 3 months. But until we see the breaking, again, I have to be technically clear here, until we see the 20 EMA on the daily being broken, the trend continues to the upside. I know the stochastic on the daily is at the top, but it can stay at the top for a while. It can move up and down at the top as well and keep going up. So again, when we are dealing with breakouts, the signals and the oscillators, the momentum indicators become more unreliable, because we are dealing with bigger volume. Again, we see the volume here compared to here. You really can tell the difference. Like, look at these candles compared to these, and that's when the signals become a little bit suspicious. Okay, so that's the these are, again, it's not going to be a long session on the levels, because I keep posting them every day and they don't change. So we don't have any new levels that we're tapping into. It's still the same ones. The only structure that I wanted you to become aware of on the shorter time frame is that ascending wedge. It could turn into an ascending channel. I like to keep the line like this. I love lines that, for instance, here they've been support, here they become resistance. To me, they're a little bit more trustworthy in terms of how price action is holding them. Okay, so that's the levels for Bitcoin. Let's see how we could trade this breakout. Now, there are two possible I think there are many ways to trade a breakout. Two possible ones that I or Roy would do. For instance, Roy would get in here at the bottom and follow this whole swing up. This would be the first I'm gonna put here, entry point at the bottom, and follow this swing up. And he would be DCAing with each retrace, and then when the swing is complete and it's reached the maximum target here, he would be taking profit. So that would be one way of trading a breakout. And in this way, what you're doing is you're holding your capital in for the length of this breakout, and you're watching your signals, and instead of coming in and out of trades, you would be adding to your capital. Now, because you are starting a breakout somewhere around here, when the breakout is not confirmed, you would have to start with, and here is where how I would use this strategy. I would start with half of my normal position, because again, I am committing that half, and that half could, how can I say, that half would first need a stop loss, and it would be easier to build on it on confirmation. And I would find it easier to manage, again, my emotions when adding to the position, because there will be ups and downs. So here, if you start a position here at the bottom line, you will need a stop loss, and that stop loss, because we're talking about breakouts, would be a little bit deeper than usual, because you would be taking the previous low as an indicator. So that would be 4.4%, which would be about 40% 10x. So that's why I would start with half of my position, because I would be emotionally more stable, more confident, to use a better word, to go into to lose 50% of that capital for the chance to follow this trade upwards. And yes, if we look at the risk-reward ratio, the percentage here would be 23%. Let's say 20%, considering, you know, you might be taking profits earlier. Let's say 20%. So this would be a 4-to-1 risk-reward ratio, which is wonderful. I think any trader will tell you that a 4-to-1 risk-reward ratio is great. So this would be one way of entering a position for a breakout. Right on the support line, putting your stop loss below the previous bottom, and then DCAing in with each lift up, because you know there's going to be 3 steps up. There always are 3 steps up. The levels are harder to measure, I give you that, especially now in this choppy sideways. Levels are a pain to measure, but they still hold. So there still are 3 levels up. Even here in this very choppy lift up, there still were 1, 2, 3 levels up. A bit abnormally high at the top and thin in the middle, but that's the way it was. Again, it depends on how much capital you feel confident to commit when starting a position like that. Then another that would be, so this would be the DCAing strategy, holding your position, so trading for position. This is what a lot of YouTubers would do. For instance, Carl from the Moon or Crypto, they see a big drop that hits a support and resistance line. They go, they buy in, and they put their stop loss below the previous low, and they just keep the position through all the swings upwards until it meets their target of, let's say for Bitcoin, 31K right now. So they would have bought in at 17K, and they would be holding the position. It doesn't matter that this would be zigzagging through all of this sideways. They might be DCAing in. I don't know. I haven't heard them say anything about that. But again, why wouldn't they? Because that's a nice way of increasing your profits. Again. Personally, I would feel more confident starting with half of my position here, because this again has to confirm itself as a breakout. When this confirms itself as a breakout, I would be adding the rest of my position. Now, you have 2 ways of entering here. You can enter on the support and resistance line, because let's face it, this is a clear support and resistance line. You can see it from space. It is super, super clear. Or you can do a 702. I'm going to remove this because it's a bit in the way. Or you can wait for this swing to top out right here. And you can clearly see that it's topping out along this divergence line. And you can enter on the 702 with a limit order here 702 and put the put your stop loss below the previous low. So you could do that as well, just as a means of applying the 702 entry refinement rules. So you could absolutely do that, no problems if you do that. So again, you enter here and you hold this for the whole swing up. You can again enter on the 702 with half your position if that makes you feel a little bit more comfortable and a little bit more confident, and DCA on breakout confirmation. So when this breaks out, when it backtests the line, and when it holds it, you can add the rest of your position. So that's two ways of entering a breakout, one on the support line, the other one at the 702, and then holding the whole swing up and DCAing when these retracements are made, because there will be retracements on the way up. So if you start here, you can DCA in here, you can DCA in here, and I'm pretty sure somewhere along these lines there might be another DCA. So you can add more money to your position on the way up and keep your profits for the juicy target at the top, or the juiciest target right about here, the 25K for Bitcoin. So that's one way of holding position through the breakout. The other way of doing it, the way that I'm trading right now, because I don't trust these swings. To me, they are a little bit too volatile for my liking to hold a position for this long. When did I draw all those lines? They seem to be so few. Okay. The way I do it right now, it is riskier because I am risking stop losses every step of the way. I go in when I have my signals. Let me switch to the 1 hour. I go in when I have my 1 hour signals and my 15-minute signals in line for a correction and a retracement. So for instance, yesterday I did, I'm going to show you on Bitcoin, I did these longs on XRP. I did a long here, I took my profit here. And then today I did a long here and I didn't take my profit because I was stop lossed out. The same thing happened to my XRP position as it happened here. And yes, it is risky because I'm risking this, but I'm also taking profit here, and also I did a short as well at the weekend. It looks slightly different, but anyways, I don't want to confuse you with that. So I went with the direction of the swing upwards. The market was going upwards. XRP wasn't above the 20 EMA, but the market was going upwards, so I had confidence to go with the market and trade this as a double bottom to the next level up, and it did pay off. Now, because of where we are right now on the macro and the fundamentals, I like to take my profit with every swing. So it's more, oh yeah, I did a short here last night. I took my profit here, I entered a short, I was stop lossed out here. Again, that was a point that I was trying to make. So I do two things. First, I take my profit on a daily basis from these swings, and second, it doesn't have to be on a daily basis, but once it hits my next level of support and resistance, as it did here, XRP did the same thing, I'd like to take my profit. I want to have the money in my wallet when the trade is done, and it can be the next day, not necessarily on that day, but I don't go to bed without securing profits. And I don't go to bed without a stop loss. The way I did my short here yesterday, I was stop lossed out during the Sydney session. So it looked like a perfect short, but it wasn't, unfortunately. Again, the profits that you make during a swing up cover for small stop losses. I don't need to tell you that. You can clearly see mathematically. Even though the breakout has a higher volume, it will still meet the levels of support and resistance that we have in our TA. So you can use the same levels that you would do for your range trading to take profits or watch for an entry or a back test. I'm thinking, yes, what you need now, the two strategies, so entering here or here and following the swing up and DCAing on the way up, this is a calmer, this is a steadier, this is a less risky strategy, because once you're in the green for the whole swing. So you don't have to watch every day for stop losses or being in the red or retracements or entry points. You just have to take position, and this is again position trading. You take your position and you follow it up, and it's a very nice calm way of doing it. Now I love my adrenaline, so I watch for, I'm joking now, I love my levels. That's mainly why I do it, and I love the structures. I love my reversal structures. So and I don't trust where the market is. I think that's where my my real issue is right now with taking a position, because I don't trust where and how this is moving. It looks perfect, it looks absolutely wonderful until it crushes your levels and goes the other way around. So that's why I like to take my profit and go in and out and basically pivot my direction depending on what's happening on the day, because every day is very unique, very special, and a direction can change. And I want to avoid getting trapped, which is the next point that I wanted to talk about today, how to avoid traps. And there are two ways to do it. The first one is by using stop losses, which automatically take you out. And by automatically taking you out of the trade, first they help you build the discipline of how can I say, calculating your entries and your exits, and also they take the emotion out of coming out of a trade that's not working out. You need to have a clear invalidation point. For instance, I put my stop loss for XRP. I went in here when it back tested the pivot point for today. I knew that New York was very likely to put another leg down, and it did. And I put my stop loss right above this previous low, because I knew that if it's going to break this, it will be chances of it coming down very forcefully are quite high. So that is my invalidation. Now that I'm stop lossed out, I will be out of the trade, out of any trade until tomorrow, most likely until London opens tomorrow, and I'll see what structure we have when that market opens. If there is no structure when London opens, or if I miss one of these legs, one of the pivot points or the levels on the day that are how can I say, that the day starts on, or the market session starts on, I will be waiting for the New York session start. So it's as simple as that. Yes, so the first strategy of avoiding getting trapped is to use stop losses. They're great for discipline, and they're great for avoiding emotions. You know, you have your stop loss in, and that stop loss is actually the invalidation point, because the trade that you entered is no longer the trade price action is now doing something else compared to where your initial entry position was. So with this making a lower low, this is no longer making a 1, 2, 3, 4, 5 for the way up. So this as a micro swing, as a smaller swing. With this making a lower low, this becomes something different, and it's breaking the support and resistance. So that's what the stop loss needs. What the stop loss needs to be. It's the point of invalidation. And the 702 entry, for instance, here what helped me was the support and resistance line, which was, if I am to put a 702, which was actually much better than the 702 here, it was a 786, a little bit lower than the 786. I'm showing you on Bitcoin. XRP's structure was quite similar today. So I would have entered here on the pivot point, and the stop loss would have been below the previous low. And now I would be stop lossed out, because again, this is no longer the 1-2. I entered this as a 1, 2, 3, 4, 5 on the way up, but it didn't happen. So how to avoid getting trapped? Take your stop losses. Second way to avoid getting trapped is to take your losses. That is the more painful part of the process, and I used to do that when I used to range trade, and I would be range trading. Let's say I would be range trading. I'll show you how I got caught here. I would be I think, was it here? I think it was here. Don't remember. I don't. I think I know that I traded this one, and I came out of it. Anyways, so you could be range trading this part and do wonderfully, and you're trading and you're trading and you're not using any stop losses, because it's only recently that I started using stop losses with every trade. I didn't used to use stop losses, and I would just risk the initial capital, and then I would have DCAs to build it up, and that would be great in a market that's trending either way, because it would reverse. But when it's trending sideways, it could break out to any side and not come back to those levels. So let's say this is the bottom of the bear market, and we're gonna go up in a bull market from here onwards. We might never come back to these levels, so DCAing in might be very, very dangerous. So here, when you see it coming up, let's say you entered here because you've seen this beautiful triple top formation, and you thought, okay, great, happy days. You can also see it here in the RSI. Brilliant, we're topping out, we're coming down, we've got bearish divergences, happy days. And then you see it break the previous high right about here, break the support and resistance level, and this would be a more painful way to, not so painful here if you're watching it, but if you're not watching it, if you're watching it, it's 13%. If you're not watching it and you're waiting for the first candle to finish, it would be a 30% loss, which would be deeper than a stop loss that you would choose. And that's why I am, and I didn't used to be so pro stop losses, but now I started using them religiously, and it is working out mathematically. Even though I have to basically invest in my trades and make sure I cover the reversal. It is working out in terms of how I'm taking the profits. The range is smaller for XRP where it is right now, but it's still worth taking those profits. So these were the points that I was, again, I've mentioned these points before in various training sessions, but I think it's good to put them all together. So I'm just gonna make a short summary. We're trading breakouts. Number one is enter on support or resistance and hold position until target. Number 2 is take profit when every swing tops out, and enter on confirmation. Enter on, I would say, sorry, not confirmation, on signals. And again, 3 yeses are important. And yes, those yeses can be the stochastic bottoming out on the 1 hour and the 15-minute. Those are 2 yeses. And then if you have a vector candle, or if you have an MA that's crossing, or if you have an MA that's holding, that is a yes. To avoid traps is 1, use stop losses, or 2nd, take your losses. It could be very expensive to wait out a breakout, and it could be very expensive, and I don't recommend DCAing where we are right now, because again, if this is the bottom of the market and we're going up from where we are right now, and if you're shorting and you're not going with it, again, your capital might be trapped for a very, very long time. I've got a trade trapped in XRP, and I'm still waiting it out, hoping it's gonna eventually get there. Now, also a major thing is you have to be patient. Now, patience really pays off in breakouts, and I'll show you why. And I'll show you on Bitcoin when I switch over to Ethereum to show you again, to reinforce some of these points. Patience pays off, because after a breakout there comes a range. So whatever this does here, if it goes up, then it will need to consolidate before moving upwards. This is not something that will, 31K for Bitcoin will not be achieved overnight. It's gonna take at least a week, maybe 2, to get to that level. We're talking about a 31K, let me see, let me measure it. From where it was on the support line to 31K is about 67%. So it will take at least, and I'm being very conservative, at least a week for that level to be reached. So once a breakout, and by a breakout I mean leaving a structure. So once it leaves this triangle structure, once the arc is complete and it's broken out, there we go, this arc has 25K for target. It will move up in waves. So even if you, for instance, do not trust shorting or longing, wherever it is, give it a week, let it play out, and after a week you will have something along these lines. So you will have a range of 3 levels that you can trade up and down. And again, you can trade it from one top to one bottom, or you can trade each level step by step, depending on how on the length of the trade on the time frame and the length of the trade that you're making. So you could be doing a 4-hour trade from the top to the bottom, or you can be doing multiple 15-minute trades between the levels. So that would be one huge advantage, and it would spare you the mental intensity of a breakout, because it is quite intense to be trading this right now, and the most intense expense is the uncertainty, because again, as long as it's holding this 20 EMA, it's moving up, but it's moving up in a bear market, which makes things more complicated in terms of the swings. Okay, so that would be the skills involved with in trading a breakout. And again, different traders and different personalities, they have different characters, and they would be choosing again their own personal mix. You'll have your own cocktail of strategies by the time you get through various stages of the market. And there are two stages mainly: the ranging and the breakout. So the ranging will give you the shorter time frame skills, the breakout will give you the longer time frame skills, but you will have to manage your capital when trading the breakout, because if you're not going with the direction of the breakout, and if this proves to be a fake out, you will need to either take your profit or take your losses. Let's say you've entered a long here and you've committed a lot of capital, and if this breaks the 19,600, you will have to take that loss, and it is a big loss to take, because if you go in here and you've committed a lot of capital, you might say goodbye to 37–40% of it, because this is where your invalidation would be. It would be the 20 EMA on the daily, and if you give it a little bit of space below it, 40–45% would be lost if you've entered here waiting for the 22.6. That's why the stop loss, a 5% or a 10% stop loss, is more advantageous. And also a smaller position, because it allows you to be more flexible. Okay. Now, do you guys have any questions about this strategy or these skills? Yeah, that's better said.
Not so far now. It seems, I think it always seems more simple when you're explaining it. I think when you're in the emotional sort of aspect of, the breakout, I think you're right in what you're saying. I think it makes it much more difficult to manage. And I think I've tried into a trade a few times this week, this past couple of days, and being stopped out, and found it really frustrating. And so I think a bit more of a strategy and a plan, and seeing this, I think, would really help that.
Absolutely, yeah. It's very emotionally consuming to be stop lossed out, but when you look back on it, you will see that how can I say, if you even financially, when you add the stop losses, it's worth catching the trade in the right, and catching is not necessarily the right word. Going into the right trade at the right time with the right capital, when those factors align, it's a big win, and it will compensate for the stop losses, and it's also a big win that reinforces your strategy. So as frustrating as those stop losses would be, they're more beneficial. They're a necessary evil right now.
Do you know what I think it is? I think it was the fact that my thought process was biased towards a short, and was convinced myself, rather than remaining objective about it. Rather than being objective, I chose to believe that we're going down again. To get to that, 16.5, maybe even lower than that. And because of that, I think when it came to the breakout, I thought it's a fake out. Like, you're cool, it's fine. You can be stopped out, just keep chasing it. It'll eventually, come to you. And I thought, shall I have one final try to get into a short at 21,000? And it came to $21,007, and I didn't. I thought, I'm not going to do it. I'm just going to wait. And so,
you were exhausted by the time it got to your target. Is that?
Yeah, well, missed all the pump, and then, all the 21 down to where we are now would be the 3-4, and then tried to get on the long, and obviously now I've been stopped out of a long. So I I think that's where so now it's almost like, well, what do I do next?
Yeah.
You know, where do I go now? I've been stopped out about 3 or 4 times.
Now we wait, Lee. Now we wait.
Yeah.
Now we wait. So I caught, for instance, for XRP, I caught a lift, and I closed my trade somewhere around here yesterday. It's the same situation, the same layout. I closed it here because these peaks wouldn't break the previous one. So I said, okay, we're done. It's a double top situation. We're not going anywhere. So I took my profit and I went short, and I was stop lossed, and I had my stop loss above these peaks because XRP did, just like Bitcoin, a lift like this. And now I thought, just like you, that this would be a 1, 2, and the DXY reinforced it as well for me, you know, because it looked like it was going to drop, and then it turned around and pumped. Like, look at this double top, look at the way the DXY is on the 1 hour. So it all looked all set. But anyways, so here it did it, and it also did this beautiful 1, 2, and I thought, okay, this is a 1, 2, 3, 4, 5, another micro. And again, I was stop lossed out, and I'm gonna let it settle, even if I have to, because I was stop lossed here and stop loss here, so 2 stop losses. I'll have to calculate my next trade very, very carefully, and I will be waiting for this to settle. If this does a massive retrace and a massive how can I say, invalidation of the swing, and I'm talking about Bitcoin now. If this comes down and breaks the 55 and breaks the 20, so be it. We will follow, we will see, there will be a how can I say, there will be a confirmation. If this level, if this 24, if this 24,600 here, this peak stays broken today, this is a signal that this accumulation pattern is invalidated. This is the first red flag that would get us to change and pivot with the action. So yes, it would stay, the trend would stay, how can I say, it's still technically going upwards, but it's no longer in this accumulation pattern. So I would be looking for a consolidation to the upside to enter a short. That's what I would be doing. Because to me, it would be a massive red flag, breaking back into this channel, like breaking back into this consolidation channel. Go away. Okay, here, breaking back into this consolidation channel means that this beauty here was a fake out. It's as simple as that. So I want to wait for it to break here. There are always now, again, it's very hard the way it's been now because it's choppy, but I don't want to use that as an excuse because we do have the signals. So again, I think the choppiness makes sacrifices a lot more stop losses because of how frequently a candle goes up and down around level. But there are always, on the way up, there will always be 3 levels. Level 1, level 2, and if this is level 3, there will be a V here coming down, another V, and then coming down. So there are those lifts, Christmas tree structures, A's on the way up, V's on the way down. There will be those structures to catch an RSI at the top, or to catch a retracement, a reversal vector like like this one here, a purple vector to the upside for reversal to the downside, or a blue vector at the bottom for reversal to the top. So I can understand how you're feeling, and it's very frustrating. I was talking about this with Roy the other day, because that's the factor. You know, when I wasn't using stop losses, I wasn't feeling that I was paying the market, like I wasn't losing money, because I was waiting, or I was DCAing my way out. So but but I was actually losing money because of how long I was waiting to get out of a trade. Those moments when I was trapped, I was losing money because I couldn't pivot. I couldn't stay adaptable.
Yeah.
So
I remember when we got caught back in June or July. I think it took about a week for us to get out of it.
Yes, I think it was this one. I think it was this one.
Yeah, it might have been.
This one or this one. Or maybe even the one, no, I think it's the one that went to 25K. Oh, this one here. Or yeah, somewhere around there. I know. Yeah. And it's a great...
Would you ever consider I thought about this, when it's sort of the pump, thought about, when you're in this situation, you're in breakout territory, you don't know which way it's really going to go, it's a 50-50 scenario like it was, the other day, would you hedge your bets by, going long, let's say on Bitcoin, and then short on Ethereum with a stop?
Yes, that would be a strategy. I used to actually use this strategy. For XRP, I would have 2 accounts, and I would go. I think you can use it on sub accounts as well. With a tight stop loss, I would go either way. I would watch out for positions, and I would go either way. But it's very if you need, first of all, you need to put your stop losses and you need to put your targets in, because they move so fast in the breakout territory. I remember XRP did a 10% pump in 2 15-minute candles. I wouldn't even have time to log in and go into the other account if I have it on a different device or in a different. I would need to literally have them ready to go. So I wouldn't put a hedge trade without a stop loss and without a take profit. And yes, it would be a strategy. Absolutely.
Cool.
Yeah.
Brilliant. Thank you.
And it does work, Lee. It does work.
Yeah, because I kind of thought, and I know that XRP, Ethereum, etc. I've been trading Cardano as well more recently, and enjoy trading too. I think I would follow Bitcoin because it's the market mover, but then I like the extra range of the other altcoins.
Yes, absolutely.
And it got me thinking that rather than doing the same, which I've been almost trading, but on Cardano or Ethereum, in this situation, maybe doing the opposite in future. At this point, when you're getting a breakout.
Absolutely, yeah, that would work. That would work. The only thing that you need to be mindful is if there are any particular fundamentals that might be interfering with the structure of the breakout itself. Like if there is any particular news, and again, market makers like to use that news. For instance, XRP, Ethereum, and Bitcoin, they all had their moves at different times in the market. So yeah, that's the only thing. But as long as you're watching, as long as you're putting the stop loss in, technically you're winning one way or the other.
Yeah.
Very good. Okay, super. Yeah, anything that helps you manage as much as it is frustrating, and I'm staying with that frustration because there's no avoiding it, paying the stop losses, I see them as, the way a restaurant owner needs to put money into the resources to run a restaurant, needs to pay the staff, needs to buy the food, and then the profit margin comes in and they make their money. That's how I see the stop losses right now. I see them as the investment to make money in these times, and it's now that they're being hit more often because of this choppiness. Once we start trading and trending and range trading, like look at the once we have the breakout and the range is set, and the range is set generally after the first swing, let's say 2 swings, let's say the swing up and the swing down. When we have here the range is set for Bitcoin, this swing sets it, and I believe these two. So between Saturday the 18th of June and Sunday the 26th of June. So it took about a week of zigzagging here to set this range. But once this range is set, we can go, and again, this is the refinement that we reached after 3 months of this. So I've changed these lines step by step. We could trade this up and down, and when it breaks this, we put the target, because this is not here it's not a breakout stage. This is a breakout stage. This is just a pattern break. This is just a channel breaking upwards. Ta-da! Here it is. Here it is. This is the new space that it opens. So once that is set, we've paid the stop losses now, but we'll have a lot fewer stop losses then, especially when we put the 702. The 702 really refines the entry points and also allows us to be adaptable, because look at how few XRP is a little bit more different than Bitcoin, but Bitcoin has a very few higher highs after the peak. So there's the peak here. Let's say you go in here, this one stops you out. You pay one stop loss to enter this whole swing down. Here you go, here you reverse here, but you would take your profit here because again it's a 1 hour swing. Anyways, don't want to get into the detail, but there, for a swing like this, there may be some occasions where you have to pay for your stop losses, but generally after the 702 and the 786 you have a lower high rather than a higher high. So that's what I'm trying to say. Yeah, that's what I'm trying to say. And I know this is where we are right now, but if we're looking on the daily, let me change to the daily volumes. Here is where we are, and this is why this is happening. Volumes are moving out of the market. It is a slowdown, so all of this sideways is happening because there is a lot of decreasing volume in the market. So here we had beautiful volume. Here the volume has decreased dramatically. So that's why we need to be a little extra cautious, a little more adaptable now compared to where we were, let's say, 6 months ago. That's it. That's the message. This too shall pass one day. Now, again, wait it out. There will be a next trade. There will be a pattern. There will be a channel. Personally, here, if I'm looking at XRP, and XRP has its own structure building up. Let me show you. Again, this is my short-term channel. Okay. If I am to look at XRP being stop lossed out and not knowing where in the world is this going, I will be giving it some time and waiting for this channel to show me. So again, this could be, I had a slightly different channel previously. This could be doing another swing to the top here around the 48, 49 mark. That was my target for my long, and then coming back down. And if I am unsure, I will be waiting for the structure to break. And when this structure breaks, if it breaks the bottom line, it's showing me that it's moving down. If it breaks the top line, it's moving up. It's an ascending channel. Chances are for it to break down. So I will be probably taking a position along this line for a short with a tight stop loss. And again, the pattern will always, how can I say, if the swings are not clear enough, the pattern and the structures that a coin makes are slightly more reliable, and they will be, there we go. And there will be something that I will be following, in times of uncertainty like this. So let's see what happens, for instance, with Bitcoin when it moves out of this wedge. That's what I'll be watching in the coming days. Friday, Saturday, Sunday, this wedge is gonna develop, show itself. That's it. Okay. All right, now I've said what I want to say about Bitcoin. The story with Ethereum is a little bit more straightforward, because Ethereum is doing now. Ethereum is looking great for continuation to the upside. I know there are some things that I am worried about, like the stochastic and the regular RSI here. At the moment, Ethereum is back testing this divergence line, and it is holding. So if we close today above it, and if we continue tomorrow above it too, we're looking great for a lift up to 1700. Let me take you to the where are my, there, perfect, my my levels. So here would be the levels that Ethereum would be moving between, and we can see that right now it's done a correction for the swing, and it's done a back test of the 55 EMA on the 1 hour. This is very healthy for any coin to do. These back tests allow for a continuation to the upside if it holds. If you are unsure whether it's going to hold or not, we can look also at the stochastic RSI. On the 1 hour, it's turned down. So you can wait for a bottoming out on the 1 hour, a 15-minute bottoming out on the stochastic, and then going into a long position for the next level up. This is what I would do. I would be waiting for it to bottom out. If it continues to hold the 55 EMA, and it is a process of patience and it is a waiting game, there are no reasons for me to believe at the moment for Ethereum on the 1 day that this is a fake out, because it is holding above the divergence line. Like here, it touched the divergence line, next day came down. Here, next day, it came down. Can it be one of these overflow situations? Absolutely. Can this be a fake out and a bull trap? Absolutely. I don't like the stochastics here. I don't like them at all. Let me change to the 1 week. The 1 week is turning up right now, so it's no longer to the downside. Oh, so again, the trend is up. The market is moving up. There's a lot of pushback from the bottom to the top. The 4 hour is looking like it's doing a retrace and a backtest of the 20, which is again very healthy. It is the previous level of support that is being tested right now. If it breaks, yeah, we'll have our confirmation. If you feel unsure and you don't feel confident entering a trade, don't do it, because that's why this is a training period for you guys to watch these difficult moments in the market. And again, I don't want to put a condition, because maybe you don't think they're difficult. So if you don't feel confident going into a trade, don't do the trade. Wait for structure to build up. Wait for a pattern, for a channel, for a wedge, for a triangle, and then go in when you see it break. There's no rush in when we're out of this. Ethereum is out of this descending structure here, and it's out earlier than expected because it well, if we can, let me see. Yeah, if we map this as a descending wedge like this, we had, and I'm not counting this, 1, 2, 3, 4. So we had 2 touches to the top and 2 touches to the bottom, complete swings. If I count the one that it entered through, then it would be 3 touches to the top, 3 touches to the bottom. So in that way, this might be complete. But again, because of where we are in the market, we are experiencing more sudden moves. And I will again show you the volumes. So these are the volumes for this whole period of accumulation, this purple channel. And here are the volume candles for this lift. So you can see 1, 2, 3, 4, 5 volume candles all in the past 4 days starting Sunday. So you can see there, this breakout is followed by volume. Price is going up with volume going up. Generally, this is not a fake out. The opposite indicates a fake out. When prices are going up and volume is going down, this is generally a fake out. But volume has been going up for the past 4 days. So again, I would be, the fact that now we're testing the 55 EMA is very healthy. If it breaks this, we're heading for the next level down, the next level down. Again, we'll have to go step by step until you've guessed it, the 4-hour support and resistance levels are lost. When we lose that 4-hour support and resistance, then we are confirming this as a fake out. And the biggest level here, you can see why Ethereum is a lot healthier than Bitcoin in terms of where it is, because basically Ethereum right now is testing this break of the divergence line or the descending channel. It's nowhere near the previous high here, so that was 1380. Ethereum has moved away from this, and it is above the next support and resistance line at 1500. So it's already done one step further. If this level breaks, yes, we're looking at coming down and finding or trying to find support on the 55. So to keep things short and clear, the 20 EMA on the daily at 1370 is the big number to hold in mind. To have in mind, have and hold, make hold. To have in mind. So 1370 is this. Now, same as with Bitcoin, if we break that level, what we're falling back into, I will remove this. I know it is a super level to have, but I want to make this very clear. So if we break this level here, we are moving into this space, and not only this space, we are moving into this space. So basically back into this wedge, and this wedge might turn into a channel like so. So this would be the downwards channel. This would be a downwards channel, not the downwards channel. So a downwards channel, and we would be going again towards 900, the 1000 first, and then continuing down the 100, especially if there is a spike through or a spill from this. And again, we see spills downwards from descending channels in distribution phases. So yes, this could be a distribution phase, a rejection phase, and this would be a channel for consolidation to the downside. Look what happened. If we're looking at patterns and the way they moved, here it touched the edge of the channel, moved down. Here, touched the edge of the channel. It's either breakout to the upside once it's out of here. So this would be the divergence, the daily divergence line where the red line is, or it could move down one more level. So again, back testing the 900 area. So that would be the danger with where we are right now. And again, there's nothing wrong with waiting it out. If there is not a trade that you feel confident in, putting your stop loss money in, wait it out and see the structure that a coin makes. Because there's nothing wrong than having your strategy. Can the market go the other way? Yes, it can at all times. No strategy works 100%. But undermining your strategy or undermining your signals or just jumping in at feeding your FOMO, basically validating your FOMO rather than your strategy is not okay. So that's not what professional traders would do. They would sit back and watch for a trade to come. There are professional traders that don't trade breakouts. It's as simple as that. They don't trade breakouts. They would be trading the ranges, making a lot of money from the ranges, and they wouldn't be trading the breakouts. And that's perfectly normal as a choice. It doesn't make you less of a trader if you don't trade the breakout. Again, sorry, the teacher in me comes out, and yeah, I know you're all adults and you make your choices. Anyways, so the levels to make the levels to watch for Ethereum are the biggest one right here in the middle. 19,600 is for Bitcoin, 1370 is for Ethereum. The level we are at the moment is absolutely crucial for the next level up. And the next level up would be, rather than, yes, I know that technically it's the 1650, but I would think the 1750. Let's take the 1750 here. Now, 1700 now on this line would be the next important level to break. I would take my profit right here, 1635, or if I am to move this, let me check. I have to constantly adjust these lines to make sure they reflect the daily levels, because this is, as much as this looks like a 1 hour structure, this 1 hour structure has arrived where it is because of the 1 day movement or the 1 week flow. So this would be, yeah, this would be the level where I would take my profit next. I would be watching for a long signal here along this line with a tight stop loss. So the next time the 15-minute RSIs reset to the bottom and the 1 hour RSI resets to the bottom and they hold the 55, I have 3 yeses, and then I will go in with a tight stop loss below this point and follow it upwards. Or if this line breaks, I wait for the break and then I wait for the back test, and at that back test with a reset 15-minute RSI to the top, I go in and I follow it down. It depends on what's happening with this 55 EMA, and if I'm not sure, I wait. Nobody's ever had to pay extra for a good night's sleep while you weren't in a trade. So there's no rush going into a trade right now. We can't do all the trades. If the 1370 breaks, this is not good. No need to tell you that. My next level would be the 1000 right here, because that shows that this was a fake out and we're coming down for another swing around here or here, depending on how long this takes. So watching for the 1370, watching for the 1520 to hold, and then watching for 3 yeses when you go into a trade, no matter the direction. And yes, I would be trading this up and down as well. And yes, Because I would be trading this up and down, I might be stop lossed here if I don't make the quick decision of taking profit. So you have to be quick on taking profit and quick on reversals these days, because again, sessions don't go as they normally would, and it's good to take your profit when it's there, and then wait out for the next 3 yeses for the next trade. That's it from me. Do you guys have any questions about Ethereum's levels or Ethereum strategy? Just, you know, if there's anything that crosses your mind. I will be trading tomorrow and this weekend, so I'll be available if you guys have any questions as well on the spot.
Kind of sounds like it's just a waiting game right now, no?
It is, JD. It is. At the moment, for instance, here, you're lucky because Sydney's about to start. It starts at... it starts at... what's the time? Yes, I think it's... Has it already started? I think it starts at 12. Let me check. It's midnight here. Yes, Sydney has started. And Sydney has started with a reset to the bottom. And generally when that happens, when Sydney resets at the bottom, there's a lift. Now you're lucky because generally Sydney, Tokyo, and Hong Kong, they all keep the same direction. So if Sydney does a peak, Tokyo and Hong Kong will do the same, or the opposite.
Gotcha.
So unless you're in, like, you see how Ethereum kept this sideways. Ethereum was the most frustrating of them all to watch today, because it literally didn't do anything. Like, it was a 2% range kept here, and here it did a lower low. So here, now this would be a great 702 entry, and again I would say that the trend is up and it's holding this. Now, here's, if you put the fib on this, 702 is right here with a tight stop loss below this low. So from the 702 to here, it's a 5% stop loss. You have the RSI reset here. You have the RSI reset here. You have the volume reversal here. So for me, these are 3 good yeses for a possible long. And again, if you get stop lossed out, that means the market intends to do something else here, and that and you need to let it play out.
Yeah, gotcha.
That's how I would be reading this.
Yeah, I was actually, when it was kind of dropping from that top point, I was like right when I was waking up, and I put in about 2 longs on the way down, and it just kind of got stopped out by it just going a little bit further, you know what I mean?
Yeah.
So I was like, all right, well, I'm going to wait. But it does seem like it's kind of leveling out right there, kind of hanging on to that EMA. So I was considering, like you said, the 3 S's and everything like that.
Yeah, like this is I got caught a while back really badly in trying to do that, it's called catch a falling knife, you know, when it drops like this. That's where the double bottom situation helps you get in on structure. So here you have actually more than 4, you have more than 3 S's at the moment. There are 4 because it's also holding the 200 EMA here on the 50. So you need to see it come down, hold support, come up, and then move down for the second leg. So it's like 2 pillars. It forms this W formation, and it's a very powerful structure for reversal. Now, where you take your profit is the big question, because it can because of this sideways, JD, it might take you up to the glorious M3 back here, the high average daily range. So from M2, technically from M2 it should take you up to M4, so right about here. But you need to be very careful if this is not just another lift to try to break this on the way down and on the way to make a fake out. So if
yeah, I got you.
yeah, so if you see, for instance, a double top like this or a double top like this, take your profit.
Gotcha.
Not necessarily, because here, for instance, you wouldn't have the yeses for a short. Not necessarily jump into a short, because again, that's a mistake. You know, taking a profit from one trade doesn't mean jumping into the opposite direction. But yeah. And is it worth? Let's see. Yeah, it's 4.4%. So even if you leave 30% on the table, you're still making 30%.
Yeah, that'd be nice.
Yeah, it would be very nice, absolutely. And then you're only risking, well, from where it is right now, not the 702, it would be a 7%. So 30%, 7, that's a 4-to-1, more than a 4-to-1 ratio. So there's nothing technically wrong with this trade. You have your yeses, you have your strategy, you're not just mindlessly jumping in, you know?
Yeah. Cool. I appreciate that. Yeah, let's see, guys. I'm definitely holding on to this long and just gonna kind of see what you have. Yeah, I just moved the stop loss to like 1,500, probably like 15.
Yes, that's it. 1,500. That's it. 1,500 would be a good. Let me see. Is it? Yes, because you can imagine now. You see how important this level is when you're looking at this. Because if the market does push below this level, it's basically breaking out of this range. So it's worth letting it play out. So if it breaks this range, then you wait for the back test here. This will probably push up for the back test after the drop, because this is what it normally does. And then if it doesn't manage to break above this level, let me see it, because I'm pretty sure we have it in our levels. Yeah, it's where it is right now. It's right here. It's a little bit lower than where we have our hourly levels. It's right about here. Do you know what? I'm gonna leave it. I'm gonna put it here so that it's clear. There we go. 1,500. So if it breaks this level, then that means this is a top formation and we are reversing to the downside, because it's also breaking the 55 EMA. Sounds very exciting. It is exciting. So that's why, but that's why that's why two things. The 702 entry helps you minimize the amount you put in your stop loss, and second, the stop loss becomes your invalidation. So the stop loss becomes a very a way that's very little emotional. I don't know how to. English so hard sometimes.
I know what you mean.
Yes, you avoid
becoming. It's kind of like a different trend.
Yes, exactly. It's a pivot. So that your stop loss there becomes the invalidation of your trade, and that's sometimes what gets us trapped. We stay in a trade because we become committed to the trade rather than admitting to ourselves that this is not the trade that I entered. So only because I don't wanna pay to get out. It's better to pay to get out, because you'll be making the money. You'll be saving the rest of your capital. Like anybody would say, it's better to take the 93% out of get it back. Risk the 7% rather than the 30 or the 40, because this decides to break out of this channel and do test yesterday's low with minus 30%, the next step down. So yeah, that would be the logic.
Cool.
Super. Good luck.
Thanks.
You're welcome.
I'll let you know how it goes.
Yeah, I'll see in the morning. I'll see in the morning
Yeah.
if it's if it was a win.
Cool.
Is it the walk
Thank
of
you.
fame or the walk of shame?
Yeah, right.
Super guys. Now have a great day, have a great evening, and good luck trading tomorrow. Fridays are very volatile, and generally there are two 15-minute trades on Fridays to make. So yeah, as long as we're having the TA and we're mapping out the space, you can see if the direction is held to the upside or if it reverses to the downside. That's the main message of where we are right now. I'll see you guys on Monday for the weekly trade setup, and I'll keep you guys posted with TA during the weekend. Bye bye.
Have a good night. Thanks again.
Good weekend.